What is going on, everybody? It's Stas here. Welcome back to another video. So today, like you all saw in the title, we're going to be going over FedEx stock. Why the heck is this stock crashing? I want to go over whether or not I'm buying it. We're going to break down some charts, some financials, my thoughts on the stock, and a bunch of notes that I have here on my iPad. So if you guys find value, hit the like button, subscribe, check out my Patreon down below if you want all my buys, sells, call outs, morning update videos, all of that's on Patreon. And with that being said, let's get right into the video. So looking at this chart on ThinkOrSwim, it doesn't take a rocket scientist to be like, FedEx stock, it has not been doing well, because look, it's gone from $320 per share back in May 2021, which was about 5 months ago, probably actually a little bit less than 5 months ago, all the way from 320 to now 220, under 220. I mean, it hit 218 just a couple of days ago. That is a drop of over 30%, putting it well into a bear market, right? So FedEx has not been doing well. It's been downtrending. They just reported earnings recently, which they were not good earnings. So let's go over now why it's falling, company warnings, inflation concerns. There's a lot going on right now with FedEx. So like I just said, FedEx reported lower than expected earnings per share for the first quarter of fiscal 2022. And moreover, the bottom line declined year over year due to supply chain disruptions, if I can say that right, and a tight labor market. Escalated labor costs and network inefficiencies stemming from staffing shortages were the major shortcomings, including the dismal bottom line performance. Additionally, the company cut its financial outlook for fiscal 2022 due to labor scarcity. And if we pull back a little bit, you guys might be saying to yourself, oh my gosh, FedEx stock is crashing. Their earnings were not great, which we just talked about how they're cutting guidance, earnings, this, that, the third, not so great. If you pull back a bit, the stock is still up from the past 3 years. Now that we're looking at it, it's right around where it was about 3 years ago in October 2018, but it's a lot higher than where it was in the COVID crash. You know, the initial March 2020 crash, it was $88. And if we pull back a bit more to the 20-year chart from the 3-year chart, you guys can see it's obviously holding the uptrend, right? We had a stellar run from that $80 COVID crash level all the way to $320. Now we've pulled back. We're holding that 50 moving average here on this 20-year chart, which has held many times in the past other than the COVID crash level. So one could argue, technically speaking here, this could be a dip buy, but it's not that simple. Trust me, it's not that simple, especially with a company that has a boatload of negative news around it. You guys are seeing all these cargo ships in New York and Los Angeles waiting to dock for 4-week wait time for many of those. So let's go over some company warnings. FedEx last week announced that it will actually hike its shipping rates 5.9% for domestic services and 7.9% for other offerings. The company said it is being hit by labor shortages, like we discussed earlier, and quote-unquote costs associated with the challenging operating environment. And the UPS CEO, even though this is a FedEx video, UPS, FedEx, they're kind of going hand in hand here, guys. I mean, come on. They're straight up competitors. They're facing the same problems. UPS CEO Carol Tome said the labor market is tight, and in certain parts of the country, we've had to make some market rate adjustments to react to the demands of the market. And she also added that the company was hit with supply chain issues. I mean, we've been saying this, and I'm afraid this is going to last, not me, but Carol Tome, UPS CEO, she said, I'm afraid this is going to last for a while. That's a bit concerning, especially coming from, this is not just from some analyst or from a random Joe Schmo. this is coming from the UPS CEO. She said, I'm afraid this is going to last for a while. These issues have been a long time coming, and it's going to take all of us working together to clear those blockages. And on top of that, we have inflation concerns, which is this on top of the supply chain shortages. This, I mean, gosh, this is causing a lot of chaos. And if you guys saw those cargo ships, waiting to be docked, there's so many across the U.S. right now, probably around the world as well. There is a ridiculous amount of demand, supply shortages. It is just crazy out there. Fed officials last week reported inflation will be higher than expected in 2021. Surprise, right? Not really. We've been talking about that. However, they still see prices settling to a more normal range, just above 2% in the coming years, which I don't know when that's going to happen. I mean, right now we know we're well above 2%. We're at 4 or 5%, probably even higher than that if they counted everything. I mean, you guys know the CPI leaves out a lot of stuff. And the Cleveland Fed president, Loretta Mester, recently said that she sees quote-unquote upside risks to the central bank's inflation forecast. That's a bit concerning coming from the Cleveland Fed president. And she also said many businesses report that cost pressures are intensifying and consumers seem to be willing to pay higher prices, which they have no choice. What are they going to do? I mean, if everything's going up in price, consumers, they have no choice. I mean, there's only so much discount shopping you can do. You're going to go here, they're going to raise prices. You're going to go there, they're probably going to raise prices. So that is pretty obvious there. And she also said the combination of strong demand and supply chain challenges could last longer than I anticipate. And that's what the UPS CEO said. Wow, pretty in line there. And she also said strong demand and supply chain challenges, yada, 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 could last longer than I anticipated and could lead people and businesses to raise their expectations for future inflation more than we have ever seen, or more than we have seen so far. So, yes, guys, this is just a hurricane plus a tsunami plus an earthquake for FedEx all in one. It's just rough out there. And when you're looking at stocks, right, especially for the long term, you want to buy. I'm not telling you guys to buy, but the theory here is you want to buy when there's a lot of negatives going on, like what we're seeing right now. Supply chain shortages, inflation, rising prices, all that good stuff. Well, not great stuff, but this is when you'd want to consider buying. But with this looming for longer than expected, I mean, you guys see it from what UPS CEO said, the Fed. This could lead to a lot of more, I don't want to say huge downside for FedEx, but if you're going to be buying FedEx today, you have to understand that, number one, there's no way this company is going out of business, so keep that in mind. Number two, though, you're going to be facing probably a couple of quarters, maybe a year or 2 years here of straight up negativity and just a rough earnings report. You have to understand that. And if I pull up the, let's see here, the Yahoo Finance, let me see if I can do it quickly here, guys. Yahoo Finance, look at the PE on FedEx right now. It is pretty dirt cheap. I mean, it's at 11. That's a pretty low PE. If you guys see it here, let me highlight it. PE ratio 11.1, market cap of $59 billion. It was like $100 billion recently. There's a dividend yield of about 1.3%. And if I pop up the financials, this company, it's not like it's shrinking. In fact, it's been growing the past couple of years. 2018, they did $65 billion in revenue. The next year, about 69.70, so that's a nice little $5 billion pop year over year. And then 2020 came around. We saw an obvious slowdown. Makes sense. They did $69 billion, same as 2019. And then trailing 12 months, they've done $84 billion in revenue. So the company's still growing the top line. I really want to see what's going to happen to the bottom line. Let's see here if we go down a bit. Total, where the heck is it here on what's it called? The Yahoo Finance. I don't really use Yahoo Finance too much. Net income, where is it? Net income. Okay. Yeah, net income has been going up a bit. It's been a little choppy. Basic EPS, diluted EPS, interest income, total expenses. Okay. So overall, they're in for it, guys. They're in for it the next couple of months. I don't think, like I said, this company is going out of business, but with everything going on with the cargo ships, I mean, look at these ships. Let's see, cargo ships, Los Angeles, New York. Let's see if we can see something there. I mean, look at all these ships just lined up. I mean, this is going to be a problem the next coming months, no doubt about it. So if you guys are willing to stomach volatility, buy into the weakness, and you want to hold long term, I think this could be the start of a decent opportunity. That is really what I'm thinking right now. And have I bought it yet? No, but I'm heavily considering adding some FedEx, especially if it dips under 200. If it starts getting that PE under 10, I'm going to be buying FedEx. I'm going to be willing to hold through this pain. Maybe even UPS. I probably won't buy both. I mean, in fact, I have to look into UPS to decide which one I do want to buy. But both of these are just getting hammered. So we got to take it into account what's going on right now. And let's see what UPS's PE ratio is for the heck of it. We saw FedEx is 11.8. UPS is at 26. Wow, that's a lot higher. Wow, I didn't think it'd be that much higher. And their growth is, 2017, 65 bill. 2018, 71 bill, 2019, 74 bill, 2020, 84 bill, trailing 12 months, 92 bill. So they're probably growing a little bit faster, but 26 PE, that might be a little bit lofty. So we're going to see how it goes, guys. We're going to be watching these stocks heavily, the whole supply shortage situation, inflation, all the cargo ships, what the heck's going on. We're going to be watching it for the next couple of weeks, no doubt about it. So now let me know your thoughts. Let me know your thoughts in the comments. Drop me a like if you guys enjoyed the video, and make sure to subscribe if you want to see more content like this, and check out my Patreon if you want more content. All my buys, sells, call outs, in real time, whatever moves I'm making, I post over there on Patreon, and I post a morning update video every single trading day. So check it out. It's linked down below. Make sure to also get your $30 from M1 Finance or 2 stocks from Webull. Those are also linked down below. Those are free money. Get your hands on that stuff. Again, for the 5th time, link down below. I'll catch you guys in the next video. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out.